Hello everybody, this is PillarTrading.com and you are looking at the chart of the day today. It is the Australian dollar versus the US dollar on the spot exchange. It is Friday today after a big week across the markets. Now, you're looking at a weekly chart here of this Australian dollar US dollar, and what we want to take a look at here on the long-term time frame is the next buying opportunity for bulls and short covering profit targets. Okay, this is it right here. This is the big one. This is the big 76.90s. Okay, that's the start of the buy level for the bulls, where they're going to turn this market around if it continues to sell off. That has a target all the way up here at 102 basically. Now, not really important in day-to-day trading, but it's always nice to know exactly where you're headed in these markets. That is the scenario that is currently playing out. If we take a look at a smaller time frame, we knock it down to the daily chart. You can see here we've got our video levels from last week that are still up here. You can see in the red and in the green. We're going to zoom in on those in a second, but we've been in a range here that you can see starting basically 2 weeks ago and playing out over here. We haven't had a breakout of this range. That's what this box is here at 85.60s down here to 80.57s. That's basically the range. We've come down, tested it 3 times to the buy side, 3 times to the sell side, and we're coming up here again. So let's go down to the 15-minute chart. And actually we're going to go down to a 15-minute chart and just look at the 20-day chart. And what we're going to see here on the smaller time frame is that exact same thing I've been talking about here, the range. Now, these are our levels from last week's video. You can see we've had a lot of participation at those levels. We just haven't had a lot of follow through, okay? Which means more and more contracts are accumulating in this area, and when you get these large numbers of contracts, you get these people really buying and selling at those levels, there's going to be an explosive move one way or the other, because as soon as stops are hit, you're going to see that trigger stop loss orders, and that will fuel the market to move very quickly. So the idea is to identify the levels where that's going to happen and get into the market against that stop loss pressure. So what we have here is, you can see that there's our level again, 85.60s, sold off once and again twice. This was our intermediate intraday bounce level. That got a bounce 1, 2, 3, 4, 5 times before it headed up and then finally broke out. We came down here, previous lows 80.65, those stood, double bottom. People took profits from short up here, took profits at the double bottom. You also had buying pressure from people wanting to get in at that double bottom after seeing the covering pressure. And then what has happened is we've raced all the way back up to those previous highs, swing highs here, as well as the highs at our daily short level up here at 85.60. Now what is playing out here is this pressure, this upward moving pressure, has got its next pullback level, its next support level at 83.85s. Okay, 83.85s is the start of it, and it finishes down here at 83.50. Now, if the bulls are going to get in this market and participate and drive us right back into, there's the target there. You can see, if we zoom in, you can see the target is up here right at that box level. Okay, so this is in no way anticipating that the range will break out to the upside. It's just to let you know that if we pull back, we are going straight back to that level up top there. Okay, and that is the short level. Now, again, it's being tested for the, what is it now, 5th time. So is it really a sell level? Well, it depends on how risky your trading is, what your risk appetite is, because again, the more times it touches a level, the less amount of orders are going to be at that level, because they've already been filled. People who are defending their position, they're going to do it on this first. They're going to get in on the first touch, second touch defend, third touch defend. It just gets weaker and weaker and weaker. So I don't really know if this is an area that would be ideal. But if we do see a breakdown, in the bullish setups, that's exactly what's happened. That range is going to continue. We need to see one of these bullish levels, these large bullish levels, respected, and we need to see that drive up through the range in order to change our bias on the Australian dollar, US dollar. Okay, so that is the play right now. Still stuck in that range, looking for that bullish participation at the next pullback, or short right from that daily level. You know it, you've seen it, you probably traded it last week. So guys, that's the play on the chart of the day. If you've got any other questions about the charts that we do on the website, stop by, drop us an email. We try to get to those as quick as we can. And I will see you all in tomorrow's video, or sorry, Monday's video, because it's a Friday. So I will see you all after the weekend.